Hello and welcome to another episode of Crypto Charts. I'm Fausto Botelho, broadcasting from Brazil. First of all, sorry for last week. I couldn't publish the video because I'm very busy recording my video classes in Portuguese for the moment. But hopefully soon enough I'll be able to offer you my video classes in English as well. Well, things are getting ugly. The S&P is falling very sharply today. And it appears that finally the bulls have capitulated and the bears are definitely taking over. So shall we take a look in the charts? Right, much better than keep talking about the S&P. So here he is, the S&P. That's the ugly candle of today. I'm recording this video at 3 o'clock UTC time. So that's the situation. We still have 5.5 hours to this market to close, but as you can see, it's on the lows. And if we actually, I'm so sorry about that. I was showing you guys the Bovespa, which is Brazil's stock exchange, but well, if you're curious, that's the figure. The S&P is much worse because it opened a gap, and with that it defined a second bull trap in these very important resistance. One of my followers has made a comment. I used to say that it was the mother of all resistance. He said no, it's the grandmother of all resistance. Yes, because look at what's where's this happening. This is happening when the market had, for the second time, broken and re-entered these two tops, the resistance of these two tops. The first one in January 2018, the second one in September 2018. And then we had a third time that was technically in the same level that happened in April this year. So yes, the things are very ugly, looking very ugly, and so that reinforces my thesis that this upward movement has been reversed, and because of that reason the market should at least correct Fibonacci levels, but I'm projecting it to 2000 level now. That would be from nowadays 31%, a 31% drop, and a 31% drop nowadays would certainly bring recession all over the world, unfortunately. And what you should do? Well, first of all, if you are still in stocks, you have to acknowledge that your subconscious will not allow you to liquidate your positions unless you decide now to look at the market, to each of your positions, and place a stop. You have to have a sentinel taking care of your position and instructed to liquidate automatically your position whether the market reaches a certain level. Which level is that? Well, take a look in your charts and find out where it gets very ugly. So if it gets very ugly, why the hell are you going to keep a position in the market? So that's the idea. You instruct your sentinel to liquidate. Your sentinel is of course your stop order that you're going to place in the broker that you trade, and someone else is going to liquidate your position for you, because if you wait for you to do it, you won't. You won't, because we're much more afraid of losing of not winning than we are of losing what we have. So because of that, we sort of block. Our minds block us, even though because for us to do something, it's something that's going to cause us pain. So our subconscious protects us against that pain, the awful pain of you having to liquidate your position with a loss many times, or having missed a lot of the gain that you had achieved. So do it, or you won't liquidate your position. And if you're still in doubt, just take a look in this chart. I'm going to use the longest chart that we have, which is the Dow Jones that we bring since 1913, and this is it. That's the chart, and here you see that you're going to be able to tell your grandchildren that you sold your stocks when the market was in, well, when the market had gone up some 1,200%, or if you want to be more if you want to be more humble, just 247% after the drop of the subprime, which I mean, it couldn't be that bad, right? If you liquidate around the place, the level that we are now. So what's going to happen to the crypto? Well, I think it's showtime for Bitcoin now, actually. In 2008, gold has dropped whenever the market crashed, but only for a while. It dropped 20%, but that's still 20%, right? And then it went up, just like I'm going to be showing you guys right now. Here it is, commodities. Well, as it's already here, let me show you my thoughts, my technical analysis on oil. I think oil is definitely coming down. Oil lived in this cave for 20 years and then it broke the roof of this cave in 2004 because of the credit bubble, and it pushed oil, which pushed oil prices to incredible $145 per barrel, and then it ended up, like we all know, in subprime. It fell from 145 to $33 a barrel. Then it went up, made these beautiful head and shoulders, and then it came down, and then it went up again, and then here we are in 2019, where I think this accumulation is definitely a continuation pattern, continuation of this previous downward movement. So here's an interesting thing. We're way below where we were before the problem in Saudi Arabia. So we've just broken this support level, and I think we're on the way to break this very important support level at 51 so far. And if we do it, I think we're heading towards this next support level, which is, I'm sorry, there's an important support level around here, which is 42.5 around a barrel. So oil coming down and gold. Let me show you what happened in 2008. Here we are. 2008. Here we are. I'm sorry. And here's what happened in the crash of the stock market. As of October 10, the market felt some 23-24%. Let me put this in a better perspective. So here's the drop of the oil price. They felt until actually they felt 30, almost 30%, because yeah, that's what they felt, 30%. I'm sorry, what have I seen here? I think I was looking at something else. Yeah, 2008 is right here. No, it wasn't from here. It was from here, right? So that is correct. Market fell 24%, but then, and it felt only until November, from October to November. It felt for a month, and then when it started to go up, and as it started to go up, it went up from the bottom, approximately, oh, sorry about that, it went up approximately 170%. It went up in all 2009, 2010, and most of 2011. So, as everybody knows already what have happened with gold at that time, maybe gold won't drop this time. Maybe gold will just keep on going to where I think it's objective at 1800, as I'm going to be showing you right now. Here it is. I think there was a bottom pattern here, a inverted head and shoulders that projects to these levels of resistance here at $1,800. So let's take a look in the short term here. Well, recently, day before yesterday, the market went down, broke the support level, and now re-entered the support level here. So it produced a bear trap. So I think it's heading to test again its top here that happened at September 14 at 1557.7 as the top. 1550, 1557. That's where I think gold is heading. So let's take a look at the cryptos now, starting with Bitcoin, which is right here. So remembering that I suppose we shouldn't consider that first movement because it went out from zero and then it stabilized at $5. So I'm starting to count Elliott Waves as of when Bitcoin was $5. So by doing that, I consider that wave 1, wave 2, wave 3, and wave 4. The most important analysis, indication that technical analysis can give us today, I think, is the fact that this was a corrective wave. And why I think that was a corrective wave? Because going to the daily chart here, analyzing these, I see very clearly 5 waves downwards here. Wave 1, 2, 3, 4, and 5. And that makes an impulsive wave. An impulsive wave then followed by by definition, a corrective wave, because a descending triangle is by definition a correction wave, right? And then if you look from far away, you don't have to count these waves here because this impulsive wave. So A, B, C. If we had an A, B, C, and as our eyes can show us very clearly, if we take a look in the long term, these resembles very much the other two corrections, right? So I think that's definitely a corrective wave. And if that's a corrective wave, I can assume, even though because we had a inverted head and shoulders here, I can assume that we're starting an upward, impulsive wave. And if that's a long-term corrective wave, then we have so far started a long-term wave 1. Is it? Let me take a look at the size of these first wave, which I think it's wave 1, and let me compare it with the other waves that we had so far. So I'm borrowing this guy here and putting it until the top here to see whether this could be considered as a wave 1. Yeah, very similar to this one here, right? Well, this wave 2 was big. Now, how about this wave 1 here? Yeah, very similar to this wave 1 here too, and can be compared with this first wave 1 here. So yeah, that could definitely be this could definitely be a wave one. And if that's a wave one, then so far we've seen the development of wave two, right? Well, I confess I thought that was a symmetrical triangle, but you know, the market, it's the imponderable. We deal with the imponderable. We don't know. The market commands. I think that last drop of Bitcoin might have something to do with Google discovering and showing the world the first signs of the quantum computer, right? So, but it doesn't matter. The important thing is that I am very certain that we are in a corrective wave. Now, there's one thing that I discovered that I realized a couple of days ago that I want to show you guys, which makes me think that this corrective wave, which I think we're going to call wave 2 of what I'm calling wave 5, right? Because again, if I forget about this first upward movement here and call it 1, 2, 3, 4, then we're starting wave 5, and that would be wave 1 and wave 2 of wave 5. So before I was thinking of projecting Fibonacci from here, but then even though because the market broke this line here, this level here, I tried Fibonacci from the very beginning here, and guess what? We have so far corrected 0.382 of this upward movement. So the market, Bitcoin, might be giving us the end of this correction. Besides, it's an important support level, right? So the thing is, what is this accumulation that we're seeing that is being formed here? So for that, we have to go to the hourly chart and see what goes on. Well, so far, I have been able even, and it's going to be even better. No, it's fine. I was going to go to the 15-minute chart, but the hourly chart is quite, it's fair enough. So I was able to draw this line here. And by drawing that line, I started to think in this accumulation here as a bottom reversal, actually a double bottom or whatever. So let's see what goes on with this accumulation here. If it breaks on the upward side, then I think we have a very good chance of being watching the very low of wave 2, and then well, sky's the limit, right? So the S&P is falling and nothing happens with Bitcoin. So I don't see any correlation coming. What I see is that whenever things get much uglier than they already are in the S&P, maybe a small portion of what's in stocks in the world today, which is 86 trillion, will land in the small crypto airport. And if that happens, well, market cap is around $200 billion. 1% of the money in stocks would be $860 billion. It's a lot. Cryptos are very small compared to the money that it's on other securities and investments in the world. And another $8 trillion, around $8 trillion in gold. If 10% of that comes, it's already another $800 billion. So there's money from a lot of places that could come into the cryptos, and of course Bitcoin is going to be the most the one that's going to be having most of the benefits of that migration. So we'll keep an eye. But yes, Bitcoin should be considered very serious now, because I think we might have seen the bottom of wave 2 already. So you better start following it, not in the daily chart, but in the hourly chart. Okay, so now I'm going to show you guys the cryptos that we are taking an eye on, keeping an eye on, which we think are going to be outperforming Bitcoin. Let me put them all in daily chart. First one is Augur, that after breaking this resistance trend line is still moving sideways, I think in a continuation pattern. So we're keeping an eye on this Augur, and also in, what do I got here? Augur, and then IOTA. IOTA, so far we've recommended, let me show you our call that we did on IOTA is right here. We made the call whenever it was at 31,106 satoshis. It was right here in this blue horizontal line. The objective for the moment is 4,000 satoshis. Yeah, 4,000 satoshis. It was 3,106. Sorry, I said 31,000, 3,106. And it's so far it's going good. Why was that? Because it broke this resistance trend line, and then it broke this resistance line here, level here, and then made an upward flag. And whenever it was escaping from the first upward flag, we made a recommendation. We've also made a recommendation on Bitcoin, and we made it when it escaped from this first upward flag here. But then so far we've been stopped because we placed our stop right below this flag here, and it barely touched our stop today. But anyway, we're still keeping an eye on it. If it breaks here, we might get it here and place the stop below here. And now back to the calls. Oh, well, okay, as we're here, we also made a call in Link. When was that? That was on the first, we're on the second, that was yesterday. And because the market was breaking this upward flag here, so we entered. Is doing very well. Objective is 34,000 satoshis. Now, yeah, 34,000. So back to the cryptos we're keeping an eye on. Next one is BAT, Basic Attention Token, which broke this resistance trend line, and it's going sideways now. We think it's in a continuation pattern. So we're keeping an eye on the hourly chart to see whenever it gives us an indication. BitShares broke this resistance trend line, pulled back to it, as we can see here, and now it's testing the support level. Sorry, this resistance trend line level here, flagging up. So if that flag pushes the prices upwards, it will break this resistance level, and it will also produce a bear trap here. So if that happens, I think we can consider at least a Fibonacci correction, which would mean from today's prices some 62% upward movement. And as we're having a flag here, oh, I love to trade on flags, because you can trade following in the hourly chart. For instance, we're going to see a much bigger flag. Of course, you can you can keep an eye, as we're doing right over here, and maybe you can do that. And let's see what we got here. Yeah, well, it doesn't matter. whenever it breaks this resistance trend level, which is the trend level of the flag, of this little flag, actually you should wait for the market to break this resistance trend line, which is 362 satoshis. Whenever you see the market above 362 satoshis, around here more or less, you can use the flag. Well, unfortunately, flags in the crypto spaces, you see a small piece of oscillation, and whenever you measure in percentage terms, you are surprised to see that it's a lot, right? But as we use a method in which we practice what some Americans call position sizing, we define our maximum risk per trade, no more than 1% of our total capital. So we use the stop, the capital one is using to speculate, the maximum limit per trade, let's suppose it's 1%, and also the distance of the stop, like in this case is 10%. So if you have, let's say, 10 bitcoins to make it easier, you have 10 bitcoins, your stop is 10% away of your entry price, and you want to lose only 1% of your whole capital, right? So what do? You have to calculate the size of your position to put in that trade, in order that if you are stopped, you're going to lose only 1% of your capital. So what's the accounting? You get your capital 10, divide by the distance of the stop, which is 10. If it was 8.7, you would divide 10 bitcoins by 8.7, which is this distance from your actual price to the stop, and then you multiply it by the percentage that you want to lose, the maximum percentage you want to lose, which is 1, right? So dividing 10 by 10 is 10, multiplied by 1 is 10. So that means you would have to put 10% of your capital, only 10% of your capital. If you want to invest more, you have to know, you have to be a very good technical analyst in order to, instead of buying coins when they break resistance, you start thinking on buying coins whenever they get close to a support level and tell you that they're not going to break the support level. How do you get that information? Well, expect a good reversal, candle reversal, and then you got your answer, right? So whenever you do that, now you have to be bold, because it takes courage for that, because you're gonna buy whenever the market had just dropped. So but it pays, because then sorry, you're gonna have your stop placed very near your entry point. So as we see, if you can put 10%, if the stop is 10% away, you can put only 10% of your capital. If the stop is 5% away, you can put 20% of your capital, right? So it really doesn't matter how far is the stop. The important thing is that the stop has to be placed where it has to be placed, and that is below a support level, right? And the support or the low of an upward flag can be counted on in order to protect your stop. Flags, upward flags, are tough girls. They protect fiercely your stop. They are fierce as that little girl in front of the bull of Wall Street, facing him with her hands like that. I love that girl. That's it. So back to the charts here. That's for BitShares. Now, Engine, we're keeping an eye on the Engine too, because broke this resistance trend level. I think it sort of pulled back. I placed this small resistance trend line here. If we go to the hourly chart, it's going to be a bigger resistance trend line. And now it is sort of flagging up or triangling in the hourly chart. So it's to keep an eye or wedging down. Whenever it breaks this line here, well, you're not trading in these in the breaking of this accumulation here, even though you could, right? Actually, yes, you can think of placing your stop right below here if you enter whenever the market breaks this resistance trend level here in engine. But you could, you could maybe give your stop give the market some wider space for it to trade, for it to oscillate. Maybe place the stop over here, because the idea is that you would be trading in the hourly chart, which is what I'm showing now, right? So, but whenever this flag breaks, yes, you can use this flag, which is the last 4 days, which is this. Yes, you can easily, whenever the market breaks this, well, you could, yes, you could use this resistance trend line here, which is the resistance trend line of the flag. Whenever the market breaks it, it confirms the flag, even though this flag hasn't got a very big mast. As I think I've mentioned here in the channel already, a flag is a profit-taking process, a situation in which people sell and they create a artificial sell pressure. Artificial, Fausto. Why artificial? Because they're selling, not because they think the market is going down, because they want to take the money out of the exchange into their pockets. That's the only reason they sell, because the upward movement is much more the upward force, it's much more powerful than the downward force. The bulls are much more powerful, they are much more strong than the bears, but these bears taking profits, they momentaneously they stop the prices and make prices drift in the opposite direction of the mast. So a flag is a profit-taking process. Which profit? The mast, right? Yeah, that's on in my course that I'm going to be offering you in video classes, hopefully in the near future. So this is it for engine. We're keeping an eye on it, as I said. Next one is Matic, whatever, which broke this resistance line and it's going sideways. I think that's a continuation pattern, so that's why we're keeping an eye on it. Ripple, well, Ripple was testing these top here, this resistance level, and I think this might evolve to a upward flag, so that's why we're keeping an eye. And also we have this resistance trend line, and what else? That's it for Ripple. Tezos broke this resistance trend level and flagged up above the resistance trend level, so that made the flag as a pullback to the former resistance trend line, which is something that happens very often, a flag as a pullback. So the market breaks the resistance trend line and then pulls back and sits in the former resistance trend level that then offers support, right? Of course, we can move this to receive the drop here, and then it goes up. So let's take a look in the hourly chart to see if it's already time for us to think seriously on buying Tezos. Well, it could be, but we deal in the daily chart. Sorry, I'm already in 0x, which is the last one. I have to go back here in the daily chart. So I think we have to wait a little bit more and to confirm that this resistance is going to be break. I think it will. And so the last one is Tezos, 0x, which reached its all-time lows. Then it produced a bear trap here because it broke this support level and then re-entered it. and then it went up, produced as a flag, a mask, then a flag. Market went up, and I think it's producing another flag. So we're keeping an eye on the hourly chart on that. So this is it for today. I hope you enjoyed the video. If you liked it, please give us a thumbs up. Help us with the channel, telling your friends about it, putting our link in your social network. Appreciate very much, and I'll see you next time. Ciao.